So in hindsight, you look at a lot of things. I mean, if you're thinking about the CME group with their glitch that was on the last day of option trading and affected silver and nat gas markets, you've got to look at these guys desperately needed out on the last day. That was about a Thursday or Friday, I think it was. I'm going to be off by a day. And then we had the attack on the weekend. No wonder they went so far to do the most obvious scam. The owners forced this technical, and it was quite a long time. The natural gas was up quite quickly. They took it down at 12.15. Natural gas was back up 12.45. They took silver down 12.15. That was only 1.45 that it came back up. So you're talking about, I think it's 1.45, might have been 1.15, but a much longer period. And that would have been a lot of phone calls. And now they've marked to deliver and bought for $86 and $81, much cheaper on those contracts. And they would have rushed to get that price down, which is when they flushed out the open interest. You might recall there was more likely to be delivered than there was supply. And that open interest differential all got quickly sorted out in that hour window on the last day of an options contract. I mean, it's absolutely absurd. But that the fact that they would do such an obvious thuggery, clear, compromised expose of the CME, clearly the carrot to get it done was the fact that they didn't want to go into this weekend that just passed with the events that ended up transpiring, needing to get fulfillment on silver, because it could have been a lot higher with what happened. 100%. And when you look at the Kospi, this guy has had an absolute blinder of a period. I'm on the 4 hour here, so the candles are quite small, but this was when I measured it some time ago, I think 144% in about 18 months. So if I just put that there.
And that's the Korean stock market? Correct.
South Korea. In case people thought it was North Korea.
Is there a North Korean stock market?
Say again, I'm not even sure if the North Koreans do much at all, but South Korean stock market, this is a substantial sell-off, and if I measure this for you, you'll see how much it's done since roughly not that long ago. So April 2025, and we're not yet April 2026, you've got 177.82%. The NASDAQ has done nothing like that in the last year. We're not even a full year. The silver wasn't as convincing. I will show you that because you're around the 90% level reflation on gold. And it seems gold's going to be kept in range a little longer from my assessment. And if you look at silver, you didn't get anywhere near the 90%. You barely crossed the 50%. You can just see it here. You're not even at the golden mean. That was your relative high point. And that was at your most bullish moment of gold as well, by the way. And you got spanked shortly after that. So most of your trade, most of your existence has been in the 38 and the 23.6 slice. And you had a little bit of 38.2 and 50%. And you just got a nose above the 50 for a very short spell. And now you're back down at the 38.2, which is a golden mean level. And it points to a bit heaviness for silver.
Hunt says the CME rigged silver before the Iran war. Insiders knew gold leads as NASDAQ/gold breaks down. Tech collapses. Korean Kosdaq down 177%. Fiat debasement accelerates. War blamed for inflation, but military spending is the cause. Gold is the safe haven. Get physical.
Yeah, the other element on silver is it's been pretty flat in terms of its recovery compared to gold. So I always say, that's why I refer to that big move that we missed in the end of January. We were very lucky not to be in, as a little bit of a reset event that took a lot of the leverage out, because silver has relatively languished. The one concern you might have is you could draw that and you could say, look, what have we got going here, So it's been a little bit low slung and a lot heavier than gold. And it also was badly spanked here. We knew there was some form of problem. We saw this broadening. And generally when you get an ascending broadening on a bull pole, that's a top out. And sure enough, you broke that floor level. You had a little bit of a jiggle on our center point there, and then you broke down. So you have some slightly concerning structure, but again, it can recover slowly and grindy. Now you've just broken a proper, correctly formed head and shoulder in the course of this month. So you tested it. So there's the shoulder. I've drawn it in orange. I'll just recap it. There's your complex boxy head. You had a spill. You supported again on this level. The key neckline level I've got at about 4.65 ounces. You can see you've supported here before. Boom. You supported here before. You didn't go as far. You rolled over. You had a break. You got pushed back at an attempt at support. You went up to the top of that wick and you can't hold it. You've exhausted it and you've triggered. So you are now trading below. So the tech market has been, and this is why I've attacked the melt-up guys on the equity market. I said they're missing the key thing. It's all about the gold market. They are nominally going up in gold ounces, the only reliable unit of account. They are setting up for reversal. And that's why, as I say, I've attacked the melt-up crew and said, its stock market is not your game. Why do you want to fight about, getting the third fastest car? Get into the Porsche Turbo right here, and that's a gold ounce. And that is triggering to the downside. And we're in higher highs, and we are going to make, in my opinion, lower lows. So lower highs, my apologies, I think I said higher highs. I meant lower highs than the previous highs in the relative valuation of gold to tech. You're going to make lower lows as part of this to the downside. By the way, that's 1.4. I think you're going to go sub 1. You could be 0 point something. That tells you a lot about, while I didn't sound that excited about gold on the hourly and the 15-minute and all of those shorter time frames, in terms of the minute we start pushing the boat out and talking daily, weekly, monthly charts, I'm the biggest gold and precious metals bull out there. And you shouldn't be bothering with melt-ups on equities. You're getting your butt kicked. It's because it's in a sliding, devaluing dollar that it is nominally going up. We are having the reset of the everything bubble in gold ounce terms, and you're going to get new currency, and your cost of living is going to climb phenomenally. Let me hand back to you. What I am highlighting here as a totally different trading environment is that when the Kosdaq goes down, the currency devalues immensely. So it's a hyper-sensitized currency to foreign direct investment coming in or leaving. So when the money was pumping into Korea, the Korean won strengthened. Remember, this is the dollar Korean won, so it goes down. That means the dollar buys less Korean wons. The Korean won is getting stronger. When you had this Asian crisis surge, the stock market was absolutely spilling its guts. So what's then happened? We had a macro HVF that finally performed to the upside. You had a couple of periods during major crises where the Korean won sold off. One, subprime. What did the Korean won do? Came from about 865 to 1,600. So you can see the blue lines up are corresponding with the red lines down. You can see it here. Then you went kind of low vol. Now what's actually been happening is you had quite a bullish period for the Kosdaq. So there was a bullish period for the Kosdaq. Typically, you would have the USD Korean won going down like that. Here was a bullish period for the Kosdaq, here and here. And you see the Korean won is strengthening and the dollar buys you less. All things nominally look great because you're in the worst period of the debasement of fiat. Debasement of fiat is non-linear. It's slowly at first, the Ernest Hemingway curve, suddenly very fast. This is why I keep putting the same message out. People don't realize we're at the worst part of fiat debasement. Everything you hear about inflation is a lie, and it's going to go a lot higher soon. And they're going to start admitting it, and then they're going to blame it on, well, Iran's nuclear. They won't blame it on the fact that they over-proliferated fiat. And by the way, we've seen this movie before. Nixon, Vietnam, more munitions than all of World War II. French call the bullshit. You're printing more dollars than you have gold. We'll take the gold. Big problem. Can't do that anymore. In short, they lied, and they were lying, and it was a fraud. Another nation called them on it, and then they had to stop. They had to stop the backing of the gold. In other words, they were cheating. Okay? It's an admittance of being cheated, caught cheating. So what did they do? OPEC was formed. It's all those damn Arabs on the other side. Oil price spiked. What did they do? Hey, it's inflation. Period of stagflation, actually, because you had the inflation of, it's all OPEC, it's the Arabs. They did it. No, not the bombing, not the napalming jungle, not the going flying phantoms, massive pig heavy iron things that were just puking fire and Agent Orange all over Vietnamese kids. No, none of that. It's all the OPEC that did it. OPEC bad. You know, the scapegoat is always going to be the Middle Eastern Arab. What did they do? They brought in Volcker, gold ran, silver ran. We had the all-time highs. They're lying, they're lying, they're lying. You had $800 gold. And then they brought in Volcker, and they killed the bond market. How did they kill the bond market? He personally ratcheted up the interest rates in the name of fighting inflation. What he was doing was killing all the debt and the debt holders that had lent to America to do the military-industrial complex thing in Southeast Asia that nobody felt or knew in the Western world because we were all sitting in Europe, Australia, Canada, and in the States itself. So OPEC was the scapegoat of it. We're getting a parallel run here. I am telling you, Iran and this, we had to reduce the nuclear threat of Iran. It's a price worth paying. That's why you have inflation. That's why your petrol will 4x. That's why your energy bill will double. That's why your food and your packaging, your delivery, your holidays, your flying, your driving, you name it, all's going up 30 or 40%. It's Iran what done it. You know, scapegoat assured. It was OPEC that did it in the 70s. Nothing to do with our excess proliferation to enrich the military-industrial complex and go on a war rampage. Nothing to do with that. Don't you dare. That's what they're going to do again. And we are in a fiat and debt-based collapse. Every time I come on, I mention it. It's one of the first things I say to you. And here you are. It's Iran that I'm telling you the future story, the news before the news. The war caused the inflation. It's because of the oil. Everybody understands that. You don't need to be a financial guy to recognize, okay, oil goes up. Why? Because they burn a hell of it. They destroy a lot of it. They bomb each other's oil depots. They stop the oil from traveling. And all other goods have to go a long way around Cape Town instead of through the Suez Canal. Everybody understands that. Oh, that's why we got inflation. No, no, and no. That's your dog tag. That's the toe tag for the dead body. It's going to be called John Doe. His name isn't John Doe. The name is Military Industrial Complex Fiat Proliferation, as brought to you by the cycle of proliferation since the bond market top in the 80s. And you've had now 40 years. We called the turn in 2020. In nominal terms, the bond market turned in 2020. In gold ounce terms, it actually turned in 2000. So we've actually been rebasing on that. But fiats are losing so much value now. There is no more reason to talk about things in dollar-based prices. You need to measure your wealth in gold ounces. That's it. And silver ounces as well, easy to do. What's everything worth? And property, everything financially leveraged, all will rebase. And you are witnessing the debasement of the everything bubble. And all the fiats are going to be muddied up, and they're going to come up with something else later. And the only thing that's preserved value and outperformed them all is a gold ounce. So that's the rule of hegemony. That's Triffin's dilemma. The export of paper, treasuries, and dollars is more in America because you overconsume and you get net imports on a grander scale than Europe and China. They have more pressure to balance their trade. One is a workshop of the world, and the other one still makes a fair amount of stuff for other nations. And that's why America is going to be hardest hit. Because you're suddenly going to have to cut your cloth to, you're almost going to need to be trade balance neutral. Every item you bring in at China, you need to be trade balance neutral. That means the dollar devaluation, that actually you can make something economically to the same price as a yuan, Chinaman in China. You really need their living standards to go up a lot so that yours doesn't have to go down so much, so that they're demanding higher wages and all of that. That's your Chiffin's dilemma. The post-hegemony period is the worst period. And you had a friendly example of that when Britain handed over to America, and they were the sick man of Europe throughout the 60s, 70s, and even 80s. And they had the 3-day work week, they had the labor unions, they tried every political gambit to try cope with the austerity. They had 3 decades of austerity, and they were, it was the worst place to run a business because they tried to tax their way into us. It was stagflation for decades. We can't even work it off over 3 decades and have a horrible 3 decades. It's that bad. It's going to have a capitulation point in it. And I'm afraid for my American friends, you really need to hear me on this one. And it's not out of hate that I say it. It's the structural design. You've had the best living standards up until now. And, you know, in terms of how much you could consume, what your country could do over offshore and things that other nations could never dream of. So you live the brightest life, you burn the hardest when you crash, sadly. And there's a symmetry to that.
All right, Francis. Well, I think we've covered pretty much all the hot topics relating to the markets today. Anything else you want to talk about before we wrap up?
No, keep an eye out for that trade. There might be a spell where there is a little bit disinflationary, and then people will even think that fiat currencies are being strong. You know, I remind everyone that Dixie fell out of an 18-year channel. I didn't have time to show you that, or the oil chart, but so you can have a return move, and it actually looks quite strong. Don't suffer from recency bias in the small space. Look at the TLT of debt divided by gold ounces. That is a dollar-denominated asset, and that is a debt instrument divided by real money, and that is awful. And that is the asset preservation. It's no longer a reserve asset. It can't be. It won't escape without being really destroyed. And therefore, the preservation, the monetary crisis have the monetary metal.